rebound in Asia, pretty much little down, at least in the early trading, but nothing spectacular. How do you see the trends moving this week?
So I think crude is actually up a little bit. So I think if you look at Friday, we had basically a big push down and then a kind of recovery. So that creates like a little kind of push to the market, I think, to the upside. There are two views, basically. One, now that we're over 50, then the market on WTI needs to get to maybe like 55, 57. So maybe like $3 to $5 above here, which makes Brent close to, let's say, 60, 58, 60, something like that. And then we roll over, but the rollover is going to be counter trend. It's going to be a correction, then we move higher. So the trend, as I've been saying for a while, on oil is going to be up. So basically, it's a kind of a buy on dip kind of market. And I think if you look at the S&P, it should start accelerating now. If it doesn't start accelerating fairly soon, then I'd get a little bit worried that we see a correction. But I think in general, both markets should move higher. I think also Bitcoin's reached its, likely to have reached its correction low, and also will start trending higher. Still bullish USD, still negative Euro, still negative GBP, and still negative gold.
Well, that seems like the perfect place to start with Omar in the middle between Randall in the land of fear in America and Victor in the land of hope in China, as the market sort of weighs up which direction do we go next. Let's go to the US, Randall Mohammed, VP Energy Solutions at Ahart Solutions International, sitting in Florida. Randall, welcome back. The outlook for growth in demand in the US at this time, infections, the scale of which everything just seems to be a bit like the S&P 500 hitting a record every day. I'm wondering what's your outlook vis-a-vis the economy of America giving a demand-driven recovery to oil prices going higher as Omar is seeing it.
Yes. Good morning, Sean. Good morning, everyone. I guess Happy New Year to all your listeners. Good to be back in the new year. Yeah, look, we're certainly upon challenging times. The virus is still with us. It's not going anywhere fast. And of course, you've seen the Biden administration promise to get out 100 million vaccines in 100 days. So that's the expectation. And what they have been doing is they have been basically commandeering most of the parks, most of the stadiums to try and get people vaccinated. Thus far, they're going to target first responders and people 65 and over. So persons like myself, we have not been vaccinated as yet. I will probably have to wait till March, April to get my first vaccination. And then we carry on from there. With regard
when you see the pathway to the COVID vaccination campaign, we've seen the COVID pandemic sort of decimate America for quite a number of months, and yet the markets and the economy seem to continue to find a way to perform and recover. Is that continuing, or is this latest wave of a scale that the recovery in the US economy will stumble if the vaccine rollout doesn't accelerate?
Well, Sean, there's a lot of, I think there's a lot of positive sentiment in the market, around the vaccinations. And this is what is sort of keeping the market buoyant at this point in time. So look, yes, the market is going to be looking closely at those first 100 days in office. And that really is going to be part of the equation. The other part of the equation, as you know, Sean, is the 1.2 trillion stimulus.
1.9,
right?
I thought.
It's, well,
Well, whatever it ends up being, a lot of dollars.
It's going to be a lot of dollars. And again, the market is going to be looking closely to see when those checks will start rolling out. And that is going to mean additional 1,400 to the 600 that was already distributed to people. And I also think President Biden is also put a moratorium on evictions, people who can't pay their rents and that type of thing. So he's put a stopgap in place.
When I was growing up, there used to be a charity in Ireland called Trócaire, and we would all put a few pennies in the box for people starving in Africa. I think probably we're getting to a point now where we all need to put a few pennies in the box to send to America and hope they recover. You're not getting to my answer, though, from the point of view of demand recovery. I mean, I think in order for Omar's price to continue to rise, tangible demand recovery has to come from somewhere pretty soon, I would think. And maybe just think on that question a bit. But let's bring in Victor Yang, senior editor at JLC Network Technology, sitting in China, the land of eternal hope and prosperity. Victor, a very strong start to the year after very good numbers in China in the fourth quarter. Do you expect that Chinese economic growth to continue into the first quarter?
Yes, well, I remember last week you asked a question about whether the resurgence of the virus would hit demand in China. Well, actually, I saw quite different answers. Well, about over 30% you answer yes, and over about 47% say no. But actually, if you are talking about demand from the domestic market, well, it has hit the demand to some degrees modestly, but not like last year. Last year, well, when we had a lockdown in Wuhan, well, restriction was placed all over the country. I mean, say, transport, production, and almost everything was restricted nationwide, but this time it's different. So we say we expect a slight impact from the resurgence, but it's unlike last year. So we expect the economy to grow this quarter, in the first quarter too. Say, well, things elsewhere in most countries, well, in most parts of the country is still normal. So like here in southern China, people still will go out to dinner, to dining, out as usual. So the restriction, the lockdown here this time is
where at the moment is the lockdown? If you could just give us a quick summary, exactly what does it look like?
Well, it's now in North and Northeast China, say like in Heilongjiang province, in Hebei province, and in several communities in Beijing, and one community in Shanghai. Say like one case in Beijing, one or two cases yesterday, and Shanghai too. So mostly in Northeast China, but now it's basically in communities. So it's not like last year's lockdown of the Wuhan, the whole city is not the same. And when Wuhan was locked down last time, well, the whole country was impacted. Why? Because, well, the local governments were also implementing all different kinds of restrictions. So
what is the planning for the China New Year coming up in 2 weeks' time with the travel for whatever 300-400 million people? Is there going to be restrictions, or will that go ahead as normal?
Well, the peak travel for the Chinese New Year will start on January 28th. That's 3 days later. And it will last 40 days until March the 8th. And now the government is calling for most people to stay put, to stay where they are for the Chinese New Year. But if they do want to go back to their hometown for the New Year, say they had to travel across the province, they need to get nuclear test result for that. 7-day nuclear test result. And if they are traveling from regions with medium and high risk to the virus, they also need the test. So say like now, even for people in Beijing, if they want to go out of Beijing, they also need to have the certificate to test. So, but people can still go, I mean, unless they are in those several communities, they have been locked down. So,
but otherwise everybody is free to travel as long as they have
so the country is kind of giving a kind of proposal. It's kind of, and local governments are encouraging people to stay where they are, particularly migrant workers. They are paying them bonus, say like 1,000 or 2,000 yuan for each migrant workers, or some other bonus to encourage them to stay.
To travel for the Lunar New Year.
So they are expecting a job in the traffic for the New Year.
So there would be some concern that the possibility this COVID outbreak could escalate if you have the same normal travel for the Lunar New Year.
Yeah, that's possible because it's winter. I mean, the virus will spread much faster. Last October, the government was not concerned about the spread of the virus at all, and actually was encouraging people to travel. But now this time it seems concerned. So that's different because it says, now we had over 100 cases a day and it's winter. So they are worried about that. So they do not encourage people to travel even during the Chinese New Year.
Okay. Omar, back to you now, having heard of the land of hope and the land of, I don't know what America is at the moment, but nonetheless, this idea that there is a demand requirement to take oil further up this recovery ladder, or what are your thoughts on the need to see a sort of a tangible demand leap up or supply constraint? Where are those two things in terms of keeping this momentum, as you describe it, the upward trend on the oil price?
Yeah, first, upwards with corrections, but yes. The question is basically, where does this? It's not going to be like something immediate or magic or that kind of stuff. So what happens is, first of all,
vaccine rollout seems to be a big gateway. Does that have to happen smoothly or not, or does it matter?
No, I think basically what happens is the market first has to go for products. The market has to go into backwardation, right? I think you're going to see that because that's the trajectory between now and June. Okay, so once that market is in backwardation, it means that stocks will no longer be there. It is not profitable to keep material in storage. So that all comes out. So when you hit, let's say, June time, and you get demand that basically strengthens why? Because basically, people feel more confident having taken vaccines and all the rest of it, travel more, go out more, restaurants, taxis, whatever. Once that hits, refineries are going to find it very difficult to make that product and start putting it in storage and selling it and this kind of stuff. There's going to be a lag there. Okay, if that hit, if you like, if that demand wave that people see coming, that I see coming, hits in such a way, you're going to cause basically a spike up in prices. And I think that's what basically people are not understanding. It's not like a wave that's coming now and it's going to hit whatever. It's two things. It's a backwardated market, which takes products storage to very low levels, combined with basically this demand wave that comes because people are more, whatever you want to call it, real economy starts recovering. Okay, so I think though the combination of those two is what basically takes us higher. So refiners won't be, so for example, you can put jet in tanks. You can't leave it there for 2 years. Doesn't work, right? You could leave it there for a month, maybe two, right? So once that stuff isn't there, and you have basically all of a sudden Emirates saying we're going to put on 50 more planes, where's that jet going to come from? Yeah, so whatever jet is there is going to be bid up. Same thing with distillates, right? Distillates runs the world. So if they start, I don't know, building roads in the US, factories, well, in the US, forget it, factories anywhere else in the world, or start basically, the economy starts, buzzing again, they're going to have to replace all those products. And that, I think, is going to cause, and I think also you've got a lot of disposable income all around the world of people who haven't spent. Yes, they've spent on, electronics and home improvements and all the rest of it. But, does anybody want to go out for dinner? Yes. Does anybody want to travel? Yes. Does anybody want to, move? Yes. It's all pent up. And I think basically it's waiting for a moment for it to surge. We've seen second wave. We've seen mutation. We've seen blah, blah, blah. So, in my opinion, again, it comes down to glass half full, glass half empty. And
Randall, glass half full, glass half empty. Back to the US. What is the US in that particular metaphor? And I'd welcome your thoughts in particular on the outlook for the politics in the US, with Biden meeting the challenge of the Senate, the Trump trial, to reach agreement on another stimulus. Where is the politics at the moment in this early days of the Biden administration to support a recovery, and not a recovery, but further stimulus even? Where's the politics, do you think, going to play out in the Senate?
Right. Well, as you know, Sean, it's still pretty early days. That the Trump trial, if I'm not mistaken, has been delayed into February. And of course, there's a lot of pushback.
It's only 2 weeks away.
Yeah. But, a lot of people wanted it to happen sooner. But what we're seeing is a lot of pushback from the Republicans in particular, for Biden to basically drop the trial and, focus on recovering the US economy, which has been severely battered by this virus. Now, in terms of, you asked about the demand, for example, just to give you some numbers, at the end of 2019, the US consumed about 420 billion gallons of gasoline. That figure has dropped off by about 10% in 2020. And
that doesn't seem like a lot, just 10%.
Yeah, people were still moving about, but again, for that figure to get back to pre-pandemic, it means that people have to be mobile again. It's all contingent on mobility. As of today, my kids are still at home with online schooling, so that hasn't happened. And the Biden administration, they have walked back on the open travel that they once had. So they've targeted Brazil, they've targeted Europe, UK, and then Ireland in particular. It's no longer free travel. If you're coming to the US, you have to come with a negative COVID test. So again, that restricts mobility. Now, Florida in particular relies on the Canadians. Every year, 3 million Canadians cross the border into Florida.
Wow.
That has not happened. It has not happened even to date. So again, that puts a damper on demand. That restricts a lot of mobility, because
maybe that's good for gas demand in Canada, with a lot more heating of houses that would otherwise be sitting on your beach.
Possibly, but think of it. Those are vehicles that are not on the road.
Okay, they would be driving.
Planes. Those are planes that are not in the air, because those borders have not fully opened, and that's just one example of where demand is going. It's basically
you said at the beginning of the conversation, Randall, that you expect your personally to your number to come up on the vaccine calendar sometime in April or the second quarter. Has that always been the case? Is that date changing? There's a lot of reporting on the rollout being slower than expected. There's only going to be one Pfizer jab, not two, and these sorts of things.
Yeah, I think there's still a lot of noise around the rollout of the vaccine. Of course, Biden is inheriting Operation Warp Speed, and we still don't really understand where Operation Warp Speed was supposed to be.
I think it was more warped than speed. Victor, back in the land of hope and prosperity, what is your outlook for the first quarter vis-a-vis the natural annual cycle of imports into China, oil, crude oil, and also welcome insights you might have on LNG? There was a build, a kind of a strong buying up till November, but then it seems to have slowed down a little bit. What would be the cycle for the rest of the first quarter in terms of imports into China from an oil point of view?
Well, for now, Chinese refiners have finished the purchase for March delivery cargoes. Well, and for January cargoes, well, our shipping schedules show that the imports are surging, at least for January now. Say like in Shandong province, where they had a lot of independent refiners. Well, in the first 20 days, well, where imports will surge both year on year and month on month, well, to about a record high in the first 20 days of January. So actually, they had placed more orders for the first quarters, but they had now slowed down the purchase. I mean, after they finished the purchase of March cargo as well, because of the concerns about demand and the price surging. So, but basically demand in the first quarters have been quite strong. Well, because of previously, well, optimistic outlook for the future, and the prices were not that high at that time too,
Yeah.
So when place orders as well. And now say demand from some other countries will continue to grow quite fast. Say like last year, imports from Norway surged by 12 times, well, because of some new grades. And from the United States, well, imports triple. And from the UAE, double. So these three suppliers were among the biggest, with the biggest surge, year-on-year surge, last year. So, and this year too, imports from Norway, from, the UAE too, also expected to grow.
I mean, last year we saw a lot of obviously record imports into China, and a lot of it was going into storage at the time. As you say, the prices were quite cheap. Is there still capacity to do more storage, or will we expect that the average in 21 will be less than last year?
Well, there's not much storage capacity left for new cargoes now. No, and now, and say in Shandong, tankers had to wait for 1 to 3 weeks now for unloading. Say like at the biggest port, Qingdao port in Shandong, they had to wait about 2 weeks for unloading crude cargoes now. So we are now seeing quite serious congestion again. So, yes.
Interesting. Let's go to the survey question before we quickly wrap around the room for sort of final thoughts for the week ahead. Just touching on this theme that we've been banging around this morning, with resurgent COVID infections and lockdowns and delays in vaccine rollout, will we need to see further oil supply constraints to keep oil prices in the 50s? I mean, there's been a lot of talk that this is really a demand story about demand recovery, but given what the outlook in lockdowns and infection rates soaring in the developed economies of the US and Europe, and delays and disruption to vaccine rollout, question is, will we need to see further action on supply constraints to keep prices in the 50s? Yes or no? So, Omar, coming back to you, week ahead, obviously the big trends that you're following are slightly longer horizon than any week to week, but is there any particular action data points you'd be looking for this week that might give guidance to the market? GDP?
No, I think basically it's important to remember that China in general is leading. Doesn't mean that there's nobody behind it. Everybody's coming. It's just that China got there first, right? So as China, so will the rest. So that's where you're lagging, whatever you want to call it, demand or whatever it is. China's showing the way. So in the US, they haven't vaccinated anybody. A lot of them are, contracting the virus, all this kind of stuff. They will catch up. And that, as Randall was saying, that demand thing that's coming is coming. So you've got to keep that in mind. It's not just, China got there first, now they're slowing down and oh my God, it's China got there first and the rest are still coming behind them. So I'd focus on that kind of stuff. In general, I would say if markets dip, it's a good, don't be afraid, it's a good time to buy. And again, I would be looking at stuff to do with the Far East, China, Korea, Taiwan, Japan, commodities in general, rather than, the Facebooks and Amazons and Twitters of the world.
Randall, your thoughts week ahead? What data points will you be watching in the US?
Well, certainly, Sean, definitely the vaccine rollout. We've got to keep our eyes on the numbers and how they progress. Secondly, stimulus. We've got to keep our eyes on that. And thirdly, what additional executive orders would be given by President Biden. We've seen the sort of cancellation of the the Keystone XL pipeline. We've seen the re-entry into the Paris Agreement. As you know, before Trump left office, he extended the permit to export LNG until 2050. I don't expect any interference with that because that brings in significant revenue and generates significant employment. There were 4 other key permits that were done by executive order in Texas. One was a pipeline from Texas into Mexico, and the other was railroad infrastructure. So it'll be interesting to see whether President Biden goes ahead or walks that back. And of course, we got to keep our eyes on leasing and permitting in the Gulf of Mexico, because 1.3 million barrels of oil equivalent comes from what we call the off-continental shelf in the Gulf of Mexico, which falls under federal jurisdiction. So again, all eyes are on offshore and not so much onshore because of the amount of production that comes from the Gulf of Mexico.
Well, it'll certainly be interesting to see if we could see a continuous recovery in U.S. oil production. We're seeing rig counts climb every week. And perhaps there can be an executive order to force those 3 million Canadians to come down on their holidays. They can get them into that pipeline and shuttle them down to Florida. Let's go to the survey question result before giving Victor the last word. Will we need to see further oil supply constraints to keep oil prices in the 50s? 65% yes, 35% no. Victor, your outlook, obviously, as you prepare for the big holiday coming up, what will you be watching for a guidance on where the markets could travel?
Well, first here, we focus on, the travel in China, say how much demand will be hit by the resurgence of the coronavirus. And previously, the transport department forecast a 40% drop in traffic this new year. But now 40%. We are not, 40% drop. But now we are not sure about this number yet. So we are still waiting to find out, how much, this traffic will drop and how much, demand will be impacted. But for planned production, most production are just as usual. I mean, say some close earlier than usual. say in China, we had the public holiday just for about 1 week, but actually for most plants, they shut down the plants about 1 month before the holiday. Usually, normally, because of few orders before the new year, and because they want to let their workers go back home earlier than usual. So some plants, when they do not have a lot of orders for the Chinese New Year, they shut down 1 month early. But now this year, some shut down earlier than usual. So we also kind of watching that demand. And how much?
And what data point would give you the market an indication on the demand impact? When would you see that? When would you expect a data point that tells you? You said 40% less travel for the new year. When does that translate into a data point?
Well, we are still seeing tickets when people booking tickets for the Chinese New Year. So now they are busy getting the test if they want to go home. So that's why they have not been able to book the tickets as early as usual. So we are still waiting to find out when the peak travel for the Chinese New Year begins in 3 days. Say about probably 1 or 2 weeks into the travel for the Chinese New Year, will be more clear. They will be more clear about how much demand will be impacted, and we will be waiting for data from the Chinese government about production in January too, and see whether it has been impacted quite significantly by the.
And then you would have to wait probably 2 or 3 weeks after that to see if there has been an acceleration in the infections, like we saw in America and Europe after Christmas, a 2 or 3 week lag to the infection rate climbing, like we've had here in Dubai, tripled over the last month of the holiday season. We have to leave it there. Victor, thank you very much to get that insight from China. Randall from the US will be sending our pennies, I promise. Me and Omar will go out collecting and make sure that with your extra $1,600 paycheck, there might be an extra buck or two from Dubai. And Omar, thank you as always for anchoring Monday mornings with your insights. Have a great week, everybody. We'll catch up in the coming days. All the best.
Thanks.
Thank you.
Thank you.
Thanks, Sean.
Bye-bye.
Bye.